YouTube. We are live on YouTube. So next thing is copy the link. Let's copy the link so that you guys can join us. Let's get the link. 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 Okay. Let's get the link. Trying to get the link of this live stream. We are currently live. I should have this. Okay. Okay. So here in the Telegram group. So I'll paste the link of this live stream in the Telegram group. You guys can just go right here in the Telegram. I have the link pasted right now. Okay, so get your hands on the live stream link in the Telegram channel. Okay, good. So let's go through the market. If you are joining us for the first time, you are welcome. Please make sure you follow this TikTok profile and then follow our YouTube channel for more educative trading content, right? So we have FSP trading requested for British pounds. That is the BTC paired against the USD. That is Bitcoin, US30, US oil, gold, GP, USD. That is from FSP from Nigeria. So before we get started with the live stream, please, if you are new to the live stream, please kindly follow this profile. Follow my TikTok profile so you can follow my backup profile. You can see ChartsEmpire Trading Institute. That is my backup account. You can follow that, right? If you are watching from YouTube as well, make sure you subscribe to my YouTube channel for more educational content on how to trade the financial market. And then please, let's share this live stream. Let this live stream go viral. Let's help the algorithm to suggest our live stream to traders on this platform, right? Let's share the live stream. Share the live stream. Share the live stream. Like the live stream. Like. Tap on like. And share the live stream. Okay, share the live stream, tap on like. Okay, let's go. Share the live stream. Let's go. Thank you guys. Okay, so let's start with the Bitcoin market. So let's go to the cryptocurrency market. We go to the BTC market. Right, so here is the BTC chart. Let's start from the weekly chart. Weekly chart, that's the first thing we want to find out right here. And this is what I have. So let's clean off all these drawings so we can have a plain chart. Now let's construct our key level structure. That's the first thing we want to do whenever we open our chart. We have a key level structure right here. That is a turning point. This is a turning point in this downtrend. You can see that. So that is the price of the 15,506. That is a turning point. Turning point on the BTC USD. And we have the next key level structure, which comes in at the price of the 25,031. Right here, you can see that. So that is the next key level structure. So if you are a trader in the cryptocurrency market, you can just pay attention to the marking of this level right here, because this is really gonna be very helpful for you. Okay, and we have another minor structure right here. So I'm gonna mark this structure right here with a black color, which seems we have a key level structure right here. Okay, but let's ignore this. Let's ignore this right here. We can, as we tag this, let's just tag this level right here with a black line, so we can know this is a minor structure. So let's change this horizontal level right here to be black. Okay, so we have a minor structure right here. So this minor structure after the 19,620, and the next key level structure we have in this market is another level structure which acts at the price of the 31,008. So this is a major key level structure right here. We're gonna mark this level. We can see it's has a lot of touches. At this zone, we have a lot of touches. This zone right here, We have a series of a touch right here as support. We got right here as support. Price broke this medium right here. We got it as a resistance right here as a resistance. Okay, so this is a nice structure, clean chart, clean level right here. Okay, so let's get it off. We have it right here. We have a key level structure at the price of the 30,000 and then 956. So we still have more level in this market. We can mark this high swing right here as a minor structure. Okay, let's change the color to black. So the key idea right here is my major key level structures are the orange color, orange horizontal line, while my minor key level structures are the black horizontal line, right? So let's mark the final leg in this market, which is the major turning point right here, right at the resistance structure right here. We're gonna mark it with our orange horizontal line. So this is the major turning point right here in this market. Okay, so we have that constructed. So these are the clean chart we have right here in this market. As well, you can try to connect a minor structure right here. Okay, can try to connect a minor structure right here, but I do not want this chart to be kind of too messy, too filled up with a lot of structures right here. Where, by the way, you can if you prefer to construct this level right there, you can have it right here. But the key idea right there is just treat this key level as the areas of interest, just areas of interest in the market. So whenever the market get to this zone, you have to carefully study price actions at these zones. So in summary, these are the levels we have on this price chart right here. Okay, so the question right now is, should we look out for a long entry or for a short entry? Well, based on what I can see in this market right here, you can see the market is at the middle of the trend. You can see right here, it's in between the resistance at the price of the 48,256 and the support structure right here. Let's emphasize on, I'm not a fan of taking the market at the middle of the trend. I don't like taking the market at the middle of the trend. I don't like do that. Because if I'm going to take in my entry at the middle of the trend, I like to add my stop loss at the very strong structures in the market, such as a support structure, resistance structure, a pullback swing. So these are the levels I like to add my stop loss. So if I'm going to be making an entry right here, the question is where will I like to put my stop loss? If I want to be making an entry right here as my entry right here, I would like to have my stop loss right there, and then the take profit right here. So which means the risk right here is higher than my profit target. So that is the first thing I think about before I make any trade, execute any trade in the market. I first have to check out my risk. My risk is very, very important. So I don't like just to get into a market without considering the risk. The risk is the first thing I check out in the market, and then next I look out how I can manage my risk. So in summary, on Bitcoin, I am not looking out for an entry right here, but this is a strong bull rally. So the chart of Bitcoin is on a strong aggressive move. Okay, and let's check on the day chart. On the day chart, okay, we seems to be having a pullback of price today. We have a pullback of price today. So what I'm going to be looking out for in this market is I want to apply my Fibonacci retracement to see if there is a possibility for me to catch this bull rally right here through a pullback. Okay, so right from the swing low of the key level structure of the 25,031, I'm going to fire my Fibonacci retracement to the high swing. And I'm going to try to monitor the reactions of price. Maybe this level is going to be resistant for pullback. So the next key level structure I'm going to be watching out for is a point of intersection to a strong key level structures on the chart. So here comes my Fibonacci retracement tool. After I apply my Fibonacci retracement tool right there, you can see we have some key level structures which aligns to some support structures in the market, just like the 34,173 key level structure we had right here. You can see the key level structure we had right here aligns it almost at the midpoint of the 0.382 and the 0.5. Anyways, if you want to take an entry based on the 0.838 and the 0.5 Fibonacci retracement structure right here, this is the premium level. Okay, so call this level right here as a premium level. So I prefer to have my trade at the discount level. That is the section of the 0.786 and the 0.186. So at this medium right here is the discount level. So I prefer to make an entry from the discount level. So in summary, I am patiently waiting for a pullback. If I can see a pullback to the 0.618 of the Fibonacci retracement level, which is the golden number, in combination with the horizontal support structure, which is a major support structure. You can see this was a resistance structure right here, and the got a resistance structure right there. This was in April and the midpoint of July. And right here, if we can have a pullback all the way down to this structural formation right here, which is a major key level support of the 30,956, which also aligns to the 0.618 Fibonacci retracement to, then this would be a nice technical zone. So if I'm going to see a strong technical bull entry right here, that would be nice entry for me. So some of you traders might have these thoughts that, is it really possible for price to pull back on this market? Is it possible for price to pull back from 40,000, 44,000, 41,000 the way to 30,000? Is it possible? Nothing is impossible in the market, right? Nothing is impossible in the market. So in summary, I want to see a pullback of price. So that is my idea right here. I want to see a pullback of price right from the weekly chart. I want to see a pullback of price, right? Okay, I can see that. Then that is the level I'll be looking at to look for possible entry on this price rally. Okay, so I want to see a pullback. If I can't see a pullback, then let the market go. I'm not going to chase the market. I'm not going to chase the market, because if you actually jump in right here, for example, for those, let's take for instance, let's monitor price right here. Those who jump in right here today, right now, are actually bleeding seriously. They're actually bleeding seriously. Those who jump in right here, they are bleeding seriously right now in the market. And this is where I always advise traders, you don't have to jump in at the extreme high of a trend. You don't jump in at the extreme low of a trend. Look out for a discount price. You look out for a pullback, a discount price. Look out to accumulate at the discount price level. So this is my view on the Bitcoin. Let's it breaks all the way down and they have a rejection at the 0.618 Fibonacci retracement level, which aligns to a major key level structures on the trading chart. If you can see that, if you can see a strong technical bull entry, that would be nice to accumulate Bitcoin. So this is gonna take weeks. This is gonna take weeks right from the point of breakout right here to the extreme high right here. And then if I should from this swing breakout, that was right from 23rd of October 2023 right to 8th of December. This is October, November, December, almost one month and a week, almost 1 and 2 weeks, always a 1.5 months. So this means we have to wait for a medium of at least maybe a month or maybe 1.5 months, and this could be around January. This could actually open around January, right? If price gonna put that, can see that. So it could actually happen around maybe January, midpoint of January, or maybe the first week of January. It could even happen at the end of December. If there is a high volume in the market, if there is a sudden pullback, or maybe there is an high impact news, a pullback right away, where there's going to be dumping of price at the upstream right all the way down. So that is my view on Bitcoin, right? What do you expect on short terms? Karen Usmans, please can you refer to the asset you mean, because I actually don't understand the asset you are referring to. Are you talking about crypto? Are you talking about foreign exchange? Please try to input the asset you are referring to, okay, so that I can give you the right information. Right? Are you referring to crypto, to forex? No. Karen Usmans, please identify. Please let your question be specific. Okay. BTC. Okay, BTC. Okay, what I can see right here is there is gonna be a dumping of price. There's gonna be a dumping of price because this market right here is kind of at a high price. The price right here, based on technical analysis, it is overvalued. It's an overvalued price right now. So I want to see price breaking all the way down. Okay, so it's considered currently overvalued. No, I don't want to jump in at the extreme right here. I want to look out for a discount price. Look out for a discount price all the way down. No discount price. This discount price will come at the 0.5 or the 0.618 Fibonacci retracement level. But I'm going to be looking out for a confluence zone to accumulate. Right? So it's overvalued right here. Overvalued at this medium. So in the next 2 days, we're going to expect more dropping of price on Bitcoin. No, we're going to expect more dropping of price on Bitcoin. That is what I'm expecting. No, that is what I can see on price. We should see a more dumping of price. Alternatively, nothing is possible in the market. The market could rally all the way up. The market could rally all the way up to the resistance structure right here, because we have a low high swing. You can see what we got right here. we got a what right here, we got a low high swing right here before the market precipitated downward aggressively. So this level right here could act as a resistance for price. So if you're going to be accumulating at the 41,371, you have to take note there's a possible eminent or resistance structure which acts at the price of the 48,356. So this level right here is an hindrance for price. So this is why I don't want to dump in right there, because if price should tag this resistance structure right there, there could be a sudden move all the way down. There could be more dumping downward, right? So this is why I don't want to accumulate I don't want to accumulate I, right? So let's see what we have let's see what we have if you accumulate at 43,000, wow, I think that is very high. You accumulated. If you are holding, well, if you are speculating, I think it's very, very risky for you if you're going to be accumulating at the 43,000 level. But if you are holding, if you can still hold on to your bag, so that is it. So let's check on US 30. Let's go through that. Let's go to US 30. No, 30 guys. I haven't found any trade today. Just trying to exercise patience. I don't want to jump into the market. No, I don't jump into the market. I exercise patience. No, patience is the way of getting money in the market. So US 30, once again, we have our key level structures in this market, and then we have our key level support all the way right here. Key level support. We got a key level support, major turning from the swing low all the way high. We got a resistance at the price of the 35,686. We got a resistance structure at the price. Okay, this level has been broken now. Let's zoom in on this price chart and see what we have on the weekly chart. This is what we have on the weekly chart right here. Price is currently at a major key level resistance structure. This level resistance structure had been active. This has been in place right from 15th of November 2021. So this is the major key level resistance structure. You can see when price tested this level again, that was on the 3rd of January 2022. No, that was double top, and the market precipitated all the way down. You can see how this top right here, this double top right here resulted in an aggressive major downward trend all the way to the low of the 29,000. So this is a major key level structure right here. If you are still longing the US 30, wow, that means you are not looking at what is going on the higher time frame. You are definitely not seeing what is going on the higher time, because based on what is going on the higher time frame, if you are a trader on US 30 right now, you should be looking out for a short setup from the higher time frame. Currently right now, I see no reason why you should be looking out for a long entry. It's gonna be very risky. Okay, so based on the 4-day chart, we had a breakout of a ranging medium to the resistance structure. Based on the 4-hour chart, this is the breakout of a ranging medium. And based on the 1-hour chart, this is the breakout of a ranging medium. So a ranging medium right here, we got a breakout to the resistance structure, right? So this was for intraday traders, those who actually made an entry right here and then targeted the resistance structure. For them to achieve the minimum 2 risk to reward ratio, they have to place their stop loss at this structural formation of the price of the 36,000 right here. Okay, we were the target right here. So a lot of traders are actually going to be closing their long position on this currency, on this asset right here. A lot of traders are going to be closing their position. So if you are trying to long at this structure right here, you are trying to long the last leg. So you are trying to long the last leg, and there's a higher possibility you could be trapped in a bullish rally. Okay, this could be a bullish trap whereby the market is going to pull down all the way aggressively down. No, price could find a minor structure right here, bounce maybe to the top, or maybe a bounce all the way to the down. Okay, so currently right now on US 30, price is at resistance structure. I'm patiently waiting to see what price is going to be doing right here. I'm not doing anything right here. I want to see, maybe you can see a strong technical short signal right here all the way down. Okay, and then I'm going to be looking out for this setup right here to be formed maybe on the weekly chart. Okay, so that is what I want to see on US 30. And let's check out on the US oil, what do we have in the oil market. So let's check out the what we have on oil market, and based on oil market, this is what we have on the oil market. Price is still grinding all the way down to the next key level support of the 67,000, and that is 0.135. The possible inverted head and shoulder, which curved right here, was not formed. Tell you guys, we have like an inverted pattern structural formation right here, voided right here, and prices continue the downtrend. So on US oil, the market still continue the way to rally to the down. So let's watch out for the next key level structure on the day chart, which acts at the price of their 67.135. This is the next key level support structure right here. Okay, you can see right here it was the support for price, and this was in the 4th of May 2023 this year. We have it right here on the June of 2023. We have it on the 13th of June 2023, 27th of June 2023. So this is a strong major key level structure. Well, this is an intermediate key level structure, not a major key level structure, because it's still within the 12-month calendar period. Okay, so this is an intermediate support structure right here for price. So this has a strong technical reason to attract boost. This could attract boost right here to put the price up. Okay, so what I'm looking out for right now, I want to see how price is going to react to this key level support right here. Maybe it's going to be a break to the upside, or maybe a break to the downside. So I'm watching out for reaction at the 67.135. So that is my view on US oil. Okay, and based on gold, let's check out gold. What do we have on gold? Based on gold, XAU paired against the USD, right? Based on the weekly chart, we still have a strong bearish candlestick. And for those who actually want to long, I told you guys, I don't support the ideas of longing right here. So the market is still going all the way down. So I told you guys that was this noon. I said we could be looking out for a pullback to the resistance at the 20,000. That is the 2006 right here, resistance structure right here. Alternatively, if price could break this level, we could look out for a retest for the continuation of the downtrend. So currently right now we're having price at this structural formation. So let's wait for maybe a strong decisive breakout of price to the downside. If we can see a strong decisive breakout of price to the downside, a retest, then we have to monitor the retest of actions right there. If you can see a strong technical reason to continue the downtrend. Alternatively, price could still make a surprise and then close up and still move all the way to the resistance structure right there. So based on what I see right here on US, on the gold, I'm still monitoring price to see what price is going to offer right there. In trading, you have to exercise a lot of patience. You have to exercise a lot of patience. In trading, your waiting time should be more than your trading time. You have to wait more if you want to get the nice and the perfect setup with lowest risk with highest reward ratio. So you have to learn how to wait. So I'm still waiting on gold. I still want to see what price has to offer right here. Okay, so this is the technical point right here. This is the point of interest, the point of action. So I'm still monitoring the reaction of price right here. It's going to be a strong bearish close. If you can see that would be nice. A pullback for the continuation, or maybe price is going to break to the upside and then continue to test the resistance structure at the 2066. So in summary, I am still waiting to see what the boost and the base have to get done at this technical support structure of the 1979.355, right? And there on GBP paired against the USD, let's check out what we have on GBP paired against the USD. This is what we have on the GBP paired against the USD. Price is still in an the indecisions are still right here. There are still point of indecision right here. Based on what we have on the weekly chart, well, I still support a bearish interest based on what we have on the GBP paired against the USD. Price is still trading below the resistance structure right here. Resistance, we got it right here as resistance, as a potential support right here. Potential support, breakout of support right here all the way down. This level is still acting as a support for resistance for price. But based on the price action, I can see right here, I am not comfortable with the price actions we have right there. This is like kind of a ranging medium. You're gonna see this ranging medium on the 4-hour chart. You can see right here. So this is like kind of a choppy market right here. We got this choppy market all the way right here. You can see that. Actually, there was a test of this level right here today, but I am not comfortable with this pattern. Maybe if we can see a breakout of this ranging medium right here all the way down, a retest as a new technical resistance, then we could be looking out for short entry. But based on what I can see right here, I don't like this type of a rangy medium, a choppy market right here. I want to see a breakout of price, maybe to the downside, before I'm going to play this market all the way down. Right? So that is my view. Alternatively, price could still trade all the way this rangy medium and break out, continue to the uptrend. So I'm still monitoring this potential rangy medium right here. You can see, still monitoring this rangy medium to see what price is going to offer. Maybe a break to the downside, or maybe a break to the upside. Right? But based on what I can see on the day chart and the weekly chart, you can remember we have a double top right here. We got a neckline. Okay, the neckline is acting as a resistance for price. So let's hope if we can see a strong, nice technical push into this level with a strong key level or with a strong bearish candlestick pattern, we could be looking out to chart right from a ranging medium right here at a resistance structure. So this could be a ranging medium setup strategy. All right, just like you have a double top, we have price breaking down, then we have price going through this medium right here. So we could be looking out to play this market based on the ranging medium, right? So could be looking out to push from resistance all the way down, so bouncing through this medium. Okay, so that is the pattern I can see on the GBP paired against the USD. So that is the possible pattern I can see right here, right? Just a push from this level, could be to the upside or maybe to the downside. But if it's gonna be in the downside, that would be nice, because it's gonna support this double top structure. And if that should occur, whereby price break to the downside, this is gonna constitute to an aggressive bearish downtrend, right? So that is what I can see on GBP paired against the USD. So any other asset? Any other asset? You guys can make suggestions. So let me show you guys what I have on my list right there. I have the XPT. I was watching this asset. It gave us a push down and then it reverses up. So I was actually waiting for the end of close of candlestick. So I am not seeing any trade right here. What I can see right here on the XPT, that is platinum, is it has a potential to continue to the upside. It has the potential to break, to test this structure and the resistance structure right there. So if price can break this level right there, then this would be our potential higher low structure. So expect more continuation on this rally to the upside. So this is what price is trying to show us right now. But price needs to break this descending trend line and the horizontal key level structure right here. Okay, so this is what I can see on platinum. So let's hope price is going to find resistance right here, or maybe a breakout from this structural formation right here. Alright, so that is what I can see. And based on British pound sterling paired against the Swiss, I've been monitoring this asset for weeks. So let me show you guys based on what I have right here. I haven't yet seen a decisive bearish breakout. But there is still more bearish sentiment on this asset right here. There is a lot of bearish sentiment right there, but I don't like this kind of patterns right here. I want to see a nice clean breakout, a nice bearish breakout. Then a pullback, then continue the trend to the downside. But currently what I can see right here is there is a tug of war between the bulls and the bears. The bulls are not yet giving over right here. So if you want to chart right here, your trade is still under the influences of the bulls. So that's why I am not yet comfortable to execute a trade right here. If I had, let's say for instance, the price was able to, let's say for instance, we can have a strong bearish candlestick today right here. I would have loved to execute a short entry right here, but right now this is not a strong bearish close of candlestick. You can see based on this candlestick right here, we can see have some forces of bulls. You can see this candlestick has what, a lower shadow. So this lower shadow right here is gradually showing us the bullish momentum in this market is not yet over. There is still bullish momentum right there based on this lower shadow. This is an influences of the bulls. So the bulls are currently pushing this price back. So I want to see a strong close of price all the way down. So if I'm going to be taking my trade right there based on a strong bearish push all the way down, I'm going to be willing to have my stop loss. Maybe if I'm going to have a push all the way down, my stop loss will have to be at this high structure. And the support structure right there, can I have a 2 risk to reward ratio? Then it means I have to execute a sell limit, so I can have a minimum 2 risk to reward ratio. But currently right now, this candlestick is not yet over, and based on what I can see on the day candlestick, I can see a nice bearish breakout. I can't see a decisive bearish breakout. So based on what I can see right here, this is not an LD bearish breakout. So I'm not going to be taking this type of trade, right? I'm not interested in type of the trade. Don't be surprised. The boost can still push the price upward and then still continue this rally in the ranging medium, right? So that is what I can see on the British pound sterling switch. But in summation of what I can see right here, okay, this is still a bearish interest. Anyway, price could still surprise us and cap a double bottom and then continue to the upside. But I want to see a strong bearish close of price below this neckline of this double top or maybe a triple top we got right there. A strong push all the way down. XL right here. I have my sell limit right here. My TP right here. Okay, try to push down. But if I cannot see a strong bearish close right here, I'm not going to be willing to take any trade right here. Okay, so that's my view on British pound sterling paired against the switch. So guys, you can ask me your questions. You can ask me your questions. You can ask me your questions. Ask your questions. Ask your questions. And then I told you guys how I accumulated Tezos. I showed you guys in my Telegram group. I had noise on in the cryptocurrency market how I executed a position in Tezos. I invested a little amount of funds right there. That was around 5k right there. So based on the 5k, actually I'm still holding on to this based on the strong bullish interest I can see on the day candlestick that was the bearish capped on Monday. So we still have an aggressive or bullish forces right here. So I'm still holding. No, since I'm not speculating right here, I'm still holding to my positions or my portfolio on Tezos. So I'm still holding that right here. I'll be looking out to exit if I can see a formation of a double top all the way down. If I can see something like a close all the way. No, I'll be looking out maybe just to get out at this medium right here. That will be at the 0.790. But based on what I can see right here now, I'm still holding on to this. But let's see, maybe this is going to be our T1 or maybe our T2, and then maybe this could be our neckline for a more downtrend on the Tezos, right? So I'm not speculating this, I'm just holding. I'm holding, right? So just want to hold in expectation if price can rise all the way up. Maybe I can just get up at this key level structure right here of the neckline, and this would be at the price of the $2.60. That would be 60 cents, right? So that is my view on Tezos. Okay, so you guys can ask any other questions you have in the live stream. You can make a suggestion for any other assets you want us to analyze, and we go through them together, right? Ask me your questions. Ask me your questions. Ask your questions. You guys can make a suggestions. Let's go through other assets in the market. And today I gave analysis on the stock of AMD. A trader requested for analysis on the stock of AMD today, and I told the trader I support a bullish interest on AMD. And currently right now the stock of AMD is going up. It's rallying up. This was my analysis today on this stock. I said I expect a bull breakout. So today, after the market opened, you can see the market continued to the upside without a pullback. So based on what we have on the stock of AMD, the market still continue upward. No, I analyzed this asset today, the live stream. So we just had a gap down when the market opened. There was a gap down, the market still continues. So on the stock of AMD, I still expect more bullish rally of continuation of the bullish trend. Okay, so that's my view on the AMD stocks. Okay guys, let's check on British pound sterling paired against the JPY. Tony Banks, your country, GBP paired against the JPY. Let's check it out. What do we have? Let's start from the weekly chart. Based on what I have on the weekly chart on the British pound sterling paired against the JPY, this is what I have on my chart starting from the weekly chart. So I have a minor key level structure, and I have a channel formations. I have a major major key level support, which is acting as a support for price. This major structure at the price of the 180.597. You can see that. Let's remove all this right here. So the market on GBP yen is still aggressive bull entry, still aggressive bullish rally. So we are having a kind of consolidation phase right here. So this could be a consolidation to the upside or to the downside. But based on what I can see on this price chart right here, this is a kind of very complex pattern. This looks like a channel. If you can have a breakout to the downside, no continuation to the downside, that would be nice. Pattern could break to the market could break to the upside and continue the rally, such like what we had right here. You can see the market broke down and then continued to the upside. So this is a very complex market based on its past historical price action. We have a channel, like a channel right structure right here. Price broke to the downside. The market rallied up based on what we have right here. You can see that price could break to the downside and then rallied up. So this is one of the things you have to understand about trading minor currency pairs. Trading minor currency pairs, most time they usually don't respect price actions, and they are most time tricky, complex to analyze. So this is why I'm always very careful whenever I want to take a trade on minor currency pairs. I always like to look out for a well fine-tuned technical patterns and the formations on this asset. So this is why I always advise beginners traders stick to major currency pairs or assets that appeared against the USDT or the USD. I mean, they usually have a lot of liquidity, and they usually respect price actions. All right. So based on what we have right here, you can see these are very complex markets, a lot of complex patterns right here. Patterns repeated themselves right here. So I'm not interested in this kind of pattern right here. I'm not interested in this trade right here. I'm not interested. To me, it is difficult to analyze. But based on what I can see on the pattern formations on this price chart right here, I can see a rising channel right from the low structure right here all the way up. We have another lower band of this channel, and then we have another channel right here in this market. So let's hope price is gonna break this channel and then navigate all the way down to test this lower band and then continue the uptrend, right? But I am not interested in this asset right here. But if you want to take this asset right here, I think this is what you need to have on your price chart on this asset. You have a bigger channel and a small inner channel. If price can break the small inner channel all the way down, you could try to play it all the way down to the next key level support, which acts at the price of the 172.233, and this is a resistance structure right here, a higher price right here. So this level could act as a rejection, as a support for bull continuation to the upside. So this is what I have on British pound sterling paired against the JPY. So instead of trading British pound sterling paired against the JPY, I would rather divert my attention to British pound sterling paired against the USD or any other British pound sterling currency pairs which are easy to analyze or simple to analyze. But based on what I can see on GP paired against the JPY, it is kind of two complex patterns, right? So guys, this is what I want to share with you guys. So you can put an end to the live stream if there isn't any other questions. We can put an end to the live stream, and then I'll be right here. So I'm not going to be doing anything this evening. I'm not going to be executing any position. My initial plan was to execute a trade on British pound sterling paired against the switch after the close of market activity today. But if I cannot see a strong decisive bearish breakout all the way down, I will never execute a sell or short entry. If I cannot see a strong bearish close of price to this structure right here, I will never execute a short entry. So this is what you need to do. If I can see a strong technical bearish close of price downward, then I'm going to be executing a short sell limit order and then targeting this low of the 1.078 as my TP, and then I'm going to have my stop loss at the high of the day candlestick which formed on Monday. So which means I'm going to have my XL right here, XL, and then my sell limit this price level of the 1.10011, my sell limit, right? And I'm gonna have my TP right here. So I'm gonna have the at least 2 points, maybe 2.4 or maybe 2.2 risk to reward ratio. I think that would be nice for me to do. Okay, so these are my plans. If I can't see that today, I will never execute a trade, right? And so that is my view. Okay. And XPT, I was also monitoring SPT, but SPT made it was a surprise. Some traders in the Telegram group already made a short entry, but I think the market right now reverses their profit. And then if they were able to trade their profit, I think there was a trader in the Telegram group today who actually got in at this extreme high, who made a short entry, a sell limit. So if you are able to trade some profits, you should have been out right now, or maybe you are out in little profit, or maybe in loss. Okay, so this is why most time I always like to wait for the end of daily candlestick. No, I always like to wait till the end of daily candlestick. Because most time the 4-hour candlestick without the confirmation on the day chart, we usually trick traders, we usually lead into a trap. So you can see right now, this is now a trap, a bearish trap. This is now a bearish trap. So don't be surprised this asset right here has the possibility to continue to uptrend, because a lot of traders who wanted to short right here, they have been trapped right now, they have been wiped out. So what we got right here is an institution play out. So this is an institutional play out right here. The institutions we are actually into this market, so they tricked a lot of bearish setup right here. They tricked a lot of traders who are shorting right here. So the market continued to the uptrend. So this is why I always like to wait to the end of day candlestick, right? Same thing which happened right here. Those who wanted to short right here, they were being trapped all the way up. The same traders who wanted to short right here again today, they have been trapped to the upside. So there was a lot of trap right here, set by the institutional traders, right? So that is my view on the SPT, that is platinum. Right, guys, so I'm not doing anything in the market. The only trade I have right now is the Australian dollars index. That is the US 200, AUS 200. This is the only trade I have right now. So this is the only trade. Let me show you guys. This is it right now. So I'm currently holding on to my long position on those 200. I told you guys I got in at the price of this 70.75, 70,075 at this price level right here. So I told you guys I got in right there. So and I am still holding on to my trade, and then I already trade some profit all the way up. So I trade some profit all the way up. So I have nothing to lose on again on this asset right there. So I already trade some profit all the way up. So I'm in some profit right now. So I want to hold on this market to keep on rallying up. So this is the market I'm currently holding on my portfolio right now. And based on the day chart, I'm currently targeting the next key level resistance at the price of this 7,000 and 390. I'm targeting this level right here as my take profit zone. So I'm going to be targeting to see how price is going to move all the way up. So I'm going to be very careful executing any trade in the market, because I don't want any other trade to take away my profit right in this market. So I'm going to be very, very careful, and this way I'm going to be very, very selective. So I don't want any other trade to take away my profit. So based on the breakout of this inverted head and shoulder chart pattern right there, if I want to measure if I want to take the measurement objective of this pattern right here, I have to measure from the neckline structure right here all the way to the extreme low of the head, and that is 7.48%. So from the point of breakout right here, that is a 5.48%. The market has a possibility of going up to this level right here. So this could be the next key level structure, which we have right here as a turning point. Okay, so the market has a possibility of reaching 7,499 based on the measurement objective. As you can see right from this neckline of this pattern to the head we got right here, actually may take the measurement objective. This is what we call the MOBJ, measurement objective of chart patterns. So for you to take the measurement objective of a head and shoulder chart pattern, an inverted head and shoulder chart pattern, for you to take the measurement objective, this is what you need to do, right? From the midpoint, we take the measurement all the way to the neckline. If the measurement is 100 pips, then you extend the measurement right from the point of breakout all the way up, right? This is 100. So your profit target should be at the 100. So price could get to this 100, price could go above, price could not, it's possible price might not get there. Maybe it could be maybe 20 or 10 pips below, like 80 or maybe 90. But this measurement objective price level will become so reliable if it aligns to a major resistance structure. There's a resistance structure at this price level, and the MOBJ aligns to this price level of the resistance. That would be nice. So that is what I'm looking at for on the inverted head and shoulder on the Australian index. And then for the upright head and shoulder, if you want to take the measurement objective, this is what you gotta do. Just like what I did on the US oil. I told you guys I took a trade based on head and shoulders on US oil. So if you take the measurement from the neckline all the way to the extreme eye of the head, if the measurement is 200 pips, then for you to take the take profit from the point of breakout right here, you have to measure the way down. If this level is 200, then you take this level as your measurement objective. If this level aligns to a strong support structure in the market, then that would be nice. So that is what I'm applying right here on the Aussie 200. So based on the measurement objective from this level right here, I mark it all the way down. This was almost 5.35%. That is almost 3,812 pips. So if I'm going to be measuring it from this level right here, or this level right here, I'm going to target this level right here. Okay, so as a measurement objective, but I want to get out right here. I want to get out right here because I don't want to be too greedy, right? I don't want to be too greedy. If I can make it up to this level right here from my point of entry right here, I think that is nice. That is nice. I don't want to be too greedy. So based on my point of interest, based on my point of entry, let's see, based on my point of entry, what is the risk reward ratio? Based on my point of entry, right from the 7.5 and then my stop loss, from the 7.5 right here. If I'm going to be targeting it all the way to this resistance structure right here, that is almost 9 risk to reward ratio. Wow, if I can achieve a 9 risk to reward ratio, isn't that interesting? I've done this a lot of times. I do this a lot of times. And then mind you guys, I'm going to keep on adding to my long entry as the market keeps on riding up. So if I can see an opportunity to scale into my entry, I'll keep on scaling to my entry and I'll keep on riding the uptrend, right? So this way I always encourage traders. You don't have to trade all the time. You don't have to trade a lot of assets. Just find one particular asset that conforms to your trading strategy and then capitalize on it, hold on to it, and then you scale up, you manage your risk, and then you can make a lot of money on that. Okay, just a single asset can give you all the whole money you need in a month or even for 2 months. So based on my Australian dollar index, I'm gonna keep on monitoring this trade, managing this trade, managing my risk, and then keep on monitoring this trade. So I'm gonna be very careful taking on that trade because I don't want any of that trade to destroy my trade on the Australian dollar index. Okay, so I'm going to capitalize on this. So the Australian dollar is a good friendship, it's a good relationship. So I don't want to put an end to a good relationship, right? So I want to hold on to this friendship right there. So it's a good friendship. Okay, so that is what I have on Australian dollar index, and I'll be holding on to this trade right this level. So if you're going to check that based on the 4-hour chart, right from this level right here, you can see that is right from on the 5th of December 2023. Okay, so we're holding on to this trade. So this could be to the end of this year or till next year January. Thank you guys. This is what I want to share with you guys. We are almost 1 hour right now. So if you have questions, you can always ask me questions in my Telegram group. I'm right there 24/7. And then don't forget to follow my backup account. So I'm going to send a message right now in the live stream. My backup account. I'm going to send my backup account. So this is the only backup account I have. My backup account. Okay. So just check this profile. My backup account. That is it right there. So follow that profile. ChartsEmpire Trading Institute. That's my backup account on TikTok. Right, guys? So if you like this live stream, don't forget to drop a comment and then share this live stream, and then don't forget to like my videos on TikTok, put a comment on my videos, join my Telegram channel, so subscribe to my YouTube channel, and I'll be right here tomorrow 12 p.m. GMT +1 on TikTok and YouTube to give you guys updates in the market. All right, so guys, trade safe. Before you take any trade, the first thing you have to think about is your risk. Think in terms of risk. Let your risk be the number one thing you think about before you execute trade. Don't think about the profit reward. Think about the risk first. Analyze the risk before you take any trade. Right? So that's what I do in the market. Before I do anything in the market, I think of the risk first. Risk. I'm not a perfect trader. I also make losses in the market. But what makes me to become a profitable trader is my losses are less when compared to my profit ratio. So as a trader, if you have 50% winning rate, if you are good in your times of managing your risk, you still be profitable. So when I say 50% winning trade is what I mean. So if, let's say for instance, you have a 50%, because some traders actually believe they need to have 90%, 100% winning trade or strategy or winning rate before they can be profitable. No, you don't have to have 100% winning rate. Your winning rate don't have to be 100%. Winning rate 90%. Or 100%. What? You don't need this. No. You don't need this. No. You don't need this. If you can have a 50% winning rate and your 50 is loss, this your loss, this your win. If you are good in terms of managing your risk, let's say for instance, you have 5 trades under the 50% right here. So if for every one trade you risk $50 right here, and then you're able to have 5 winning trades, so that is your 50 multiplied by your 5. So that's gonna be what? That's gonna be 250. So if you are to take a 2 risk to reward ratio, if you are to take multiply by 2 risk to reward ratio, if each of your trade is 2 risk to reward ratio, so that is what? That is 500. So it means your 1 right here represent X. That is the value of 1 right here. Okay, so that is 500. Okay, so right here, if your value of 50 is X, and then you lose 5 trades, that is of 5 times 50 right here, that is equals to 250. So if you subtract your 250 right here, subtract your 250 from your winning 500 right here, you are left with what? You are still left with 250 right here. You're still left with 250. So you don't need a 100% winning rate to be profitable. So you are still left with what? 250. So you are still profitable on your account. You are still good. Okay? And then if you have a 40% winning trade, if you're a beginner, if you have just 40% winning trade, you're a beginner if you have 40% winning trade, which means you execute 5 trades right here. And out of the 5 trades, you have just 4 winning trades. Okay, you have 4 winning trades, and the 4 winning trades are 2 risk R, so that is 200 times your 2R, right? So you're still gonna have 400. Is that right? So if you manage your 200 minus your 250, you're gonna still be left with what? So that is it. So you necessarily don't need to have like no 100 no winning rate for you to be profitable. You don't really need that. It's gonna be have like 150. Is that right? So as time goes on, as you keep on progressing, you keep on improving your trading skills, then your winning rate keeps on increasing. So if you still are not a good trader, if you are just starting and then your winning rate is 30%, if your winning rate is 30%, you are still struggling, and then you are having like a 70% losing trade, you are having 70% losing trade, and then your winning trade is 30%. So let's check if you're gonna be profitable. So if you have just 3 winning trade right here, so that's gonna be 150, that is 150. So that's gonna be 150 times 150 right here. So 150 right here. Okay, let's see if you're gonna be profitable with 30% winning rate. 150 times 2R. So that is gonna be 300, right? 300. So right here, if you have 7 losing trade, that is the worst come to the worst, you have 7 losing trade. Wow. So that's gonna be around 350. You see that? So this is gonna be 350. It's gonna be 350, right? So if you minus the 350 from your 300, you're gonna be left with minus. Yeah, that's gonna be minus, right? That is 350. So we're gonna be left with minus right here. So minus. No, it's gonna be left with minus. It's gonna be minus 50. So which means out of 10 trades, if you are able to win 3, and you have 7 losing trades, you're still gonna lose $50. So risking trade, yeah, minus 50. So risk management is what can help you on the long run. This is what can help you to survive in trading. So if you are just starting, you don't expect to have a 90%, 100% winning trade. So if you are still starting, if you are able to keep within 40% winning rate. So let's do the mathematics again. So if you are starting maybe from 20% winning rate, you keep on improving to 30. You know, that 30 you are still not profitable, and then you keep on improving to 40% winning trade, right? So this is when you get to a break even. There is a time whereby when you start trading, you lose money. As time goes on, you make money, you lose money. There will be a stage whereby you become break even. So once you start becoming a break even trader, it means you're now on the right path. You make money today, you lose it the following day. You make money this month, you lose it the next month. That means you are getting up. No, you are actually getting things. What you just need now is discipline, because most time when you make money, you tend to overtrade and you lose it back to the market. Most time when you make money, you believe, oh, you are the king of the market, you start trading and you make loss. Most time when you make money, you try to trade other strategy to make more money and you lose the money you've made. So this is when you start to become a break-even trader. So let's do the mathematical analysis right here. So out of the 40% winning trade right here, 40% winning trade, and you have a 60% losing trade right here. Let's represent this value right here with 4 wins, and right here with 6 loss. So and each x value right here is equals to 1, or is our x is equals to 50. We are risking 50 on our account. So let's get it right here. So we are risking 50 right here. So on each 4 trade right here we have on our account, that is times 50, and then times 2r. We ensure the minimum 2 risk to reward ratio right here, and then right here you have 6 times 50 right here. Okay, and right here you're gonna have 200 times 2r. This together right there, 4 times 50, that is 200, times your 2r right here. This is gonna give you 400. Okay, this 400. So your 6 times 50 right here is gonna give you right here is gonna give you 300. Okay, so by the time you minus your 300 losing trade, loss right here, your losses right here, by the time you minus it from your wins, right here is your wins right here, and then you minus them, you are still left with 100. So with just 40% winning trade, that means out of 10 trades right here in the market, out of 10 trades, you are able to have just what? Just 4 winning trades. Just 4 winning trades can still rank you among profitable traders. So you have to be grateful with any amount you can make out of the market. As time goes on, you keep on improving your trading skills. So it's a gradual process. So it's all about growth. You have to keep on improving. And one of the ways you can improve in trading is put down your trading or activity. You have a track record. You put down your winning trade, your losing trade. You record your observations. You write down your plans, your goals, your objectives. You stick to one trading strategy. You stick to a few asset to trade. Once you've mastered an asset, once you are profitable, then you can move to the next stage. So as time goes on, you keep on improving, and then you have to exercise patience. You have to be patient with yourself. You have to see trading as a business, treat it as a business, follow the process. You don't have to rush. You don't have to be too desperate. So follow it. Patience. Follow the process. So there is it. Okay, so imagine you are able to close like 7 trades out of your 7 trade, and then you become a good trader out of your 10 trade right here. Out of the 10 trade you have, after you have become a good trader, you are able to win 7 trade, and then you lose 3 trade. So that is a 7 trade, maybe times 50 right here, and then times 2 risk to reward ratio. That's gonna give you 350 times 2. So that's gonna give you 700 right here, and then your losing trade right here, that is 3 times 50. That is if you work based on two risk to reward ratio, right? If you work based on 2 risk to reward ratio, so on your loss right here, it's gonna be 150. So if you subtract it right here from your 150 right here, you are still profitable. So it's gonna be your 550 right here. You can see that. So it's just about managing risk. Now let's take it other way around. If you are able to make right here, you are able to make 7 winning trade, and then you tend to believe in yourself, and then you neglect your rules, your plans. You tend to become greedy because you've made 700 right here, and then the next trade right here, you risk 200 right here, and then you lose the 200. The 200 is gone, minus, and then you want to get back this money again, and then you get in right here again, you risk like 300 right here, then it's minus, and then you want to make back the 500 right here, and then you get in, you reach 500 right here with the hope of making 1000, you lose it right here. So that is going to be 800 with 200 right here. So that's going to be 1000, and the 1000 minus your profit right here, then you are left with a minus 300. So this is how the risk of run is being built, right? So thank you guys. So we're gonna be right here tomorrow 12 p.m. If you enjoy this live stream, this analysis, this live stream, make sure you follow my profile and subscribe to my YouTube channel. So I'll be right here tomorrow 12 p.m. GMT +1. Take care. God bless you. Have a wonderful night sleep. Good afternoon, good evening. Thank you guys.